Hello, everyone. Welcome to today's session, live analysis session. We're just going to wait 1 or 2 more minutes for people to come in, and then we'll begin today's session. Okay. Hi, everyone. Let's begin. And as more people come in, we can go through the introduction first, and then the live analysis thereafter. Okay. Again, for today's session, if you we're going to go through the standard few pairs, the dollar index, and a few dollar pairs. If you want me to go through some of the other cross pairs or the minor currencies, or crypto or the commodities, feel free to put it in the chat so that we can look through some of these pairs. Okay, so my name is Sherman, and today is this session collaboration between Vantage and Zeta Labs. Basically, I focuses on mainly the technical analysis on forex pairs as well as commods, and also algorithm trading for Zeta Labs. Okay, so before we begin, I just want to highlight that trading forex or any form of derivatives is a high risk activity. Do ensure that whatever that's covered in today's session is in line with your own trading objectives. And if you do need advice, do seek them out separately and before making any of these trading decisions. Okay. Just gonna open up the chat. Okay. So I'm going to go through some of the key economic events this week and what has led to the current setup for some of these currency pairs. Then we'll go through some trade ideas. The key thing is the dollar index, euro dollar, as well as the gold dollar. Okay. So let me just go to the charts. I'm going to start with the dollar index. For those who are new, we have been going through. Dollar has been the focus for us for the last, let's say, 4 or 5 sessions. So I'm not going to redraw everything. I'm just going to go really quickly on the high overview and then see where we are right now and what will be the potential setup for the dollar. Okay, so the dollar index, for those of you who are not familiar with the dollar index is basically comparing the US dollar against a basket of currencies, mainly the G7 currencies. And basically, we are trying to figure out what's the strength of the US dollar against the other currencies. Okay, so since we have spoke about this before, since the start of the year, we have been on this channel, this upward channel to the current state of things, which is basically the 20-year high. I think the latest one was at 105 14.778. Okay, so just to recap on what we were trying to the previous setup that we had was that we wanted it to bounce off this channel and then move the next leg up, right? But I think earlier this week it broke out of this channel. So on the daily time frame, we're basically out of this upward channel, and now it has formed a new range above this upward channel. Okay, so usually how we trade this is that once it breaks above the upward channel, there's usually a retest. So how do we determine the retest? We usually go down to the lower time frame. You'll retest the previous upward channel, and that will form the lower bound of the channel. And now we're in this new channel. I'm just going to highlight it in a different color so that we can differentiate between the two. Okay, I'm just going to highlight it in green, and now we're in this channel. Okay, so as the dollar index approaches the top, we're looking to sell the dollar, and as it approaches the bottom of this channel, we're going to look to buy the dollar. Okay, but based on the fundamentals, right? The Federal Reserve is still very aggressive in terms of rate hikes and reducing the money supply in the market. So unless there's a counter, an equal counter decisions by the other central banks against the dollar, we'll only look to buy the dollar and avoid any sells of the dollar. Okay, we want to trade with the trend. We do not want to go against the trend. So this is kind of our new setup. This spike up happened this late last week, right? And then we saw this. So 26 was early this week, right? This spike up was early on Monday, Sunday to Monday, right? And there were a few events that happened. I'm not going to go through any of the fundamental events, but basically, high overview will be tensions in Europe against with Russia, the Japanese yen, the Bank of Japan coming in to support the currency because yen has depreciated quite a bit since COVID started, right? So there's a lot of events going on. Bank of England, I think there was another big event where they were going to do tax cuts, and that didn't. That sort of caused a 4% drop in the pound. So a lot of events happening right now, and we can see a lot of this sort of volatility in the market. Okay, so I'm just going to go through the Euro dollar right now. Again, if we go to the daily, let's look at the high overview first, right? So the Euro dollar is the sort of right now it's inversely correlated with our dollar index. So as dollar index moves up, our Euro dollar will it's actually moving downwards. So the correlation is very high. They are inversely correlated. Okay. If we go down to the 15 minutes, this was the analysis done for Vantage as well. So basically, what happened on Monday? There was this fall off in price of Euro dollar, and I think in the previous session we did mention that. Okay, let me just move to the previous session. We were somewhere around here last week, right? So as we zoom out, right, there was this downward channel that touched perfectly on the 12th of September, retested on the 13th, and it fell towards this position here. And this was, I think, the all-time low for Euro dollar back then, right? But because of this parallel channel, we did mention that there's still a leg down to fill this downward trend at around 0.955, right? So fast forward to today, right now we are at this level here. So in terms of the outlook of Euro dollar, we should start to look into reducing the number of sells. because we're already at the lower channel, right? The bottom channel, we might look for a break of this support before we re-enter our sells. So now would be a good time to reduce the number of sells, but that doesn't mean that we are looking into any buys at the moment because of fundamental reasons. Okay, so I'm just going to go through the 15 minutes, what we're seeing here right now. Okay, so there's this fall off of the euro dollar, and we have this channel down. So at every point here, as it approaches this downward resistance, right? This point here, right? Sellers are coming in to push the price down further, which means that they have stop losses at these levels, right? So if we were to look at a price move up to this past this level, we can sort of expect prices to move up to at least this channel before moving down again. Okay, these are all basically liquidity by our sellers with their stop losses. If they are not out of the market here, right, if they're expecting another leg down, means that if a buyer comes in, or if buyers were to come in to push price past this downward channel, we will expect to see price hitting this resistance before moving back down again. Okay, so the expectation right now is that this is something else. So now we are seeing this descending channel, descending triangle here. So if I were to sort of look at the past 2 sessions where sellers came in to defend their positions, right? You can see that there is this downward sloping channel here, and usually we can sort of like create a triangle. And what does a triangle do for us? That's my triangle. Okay, so a triangle like this, right? So I'm not going to go through the setup per se. I'm just going to go through the logic behind why a descending triangle like this will cause a breakdown of the structure. So basically, as prices move up, right, sellers come in, they are very impatient to defend this area, so they sell down. Buyers will quick to defend this area, right? And then as they move up again, sellers are very impatient. Previously, this was the premium price. Now it's lower, right? It's sellers lose out by selling here, but they are still willing and able to push the price down from this level. And then again here, a less premium price they're willing to push. So sellers are very impatient in this market, whereas buyers are consistently defending this area, which means that below this area, we know that buyers are coming in to defend this area. Stop losses will be filled at below this level here. If prices were to cross this level, we will see a huge black candle down because of the cascading stop losses that are being triggered. Okay, so a usual that's what happens usually when you see such a pattern, right? It usually breaks off this support and it goes down. Okay, again, stop losses are here, right? And then if prices buyers are strong enough to push this price up, then we can expect a price up to this level. Again, I think this is largely going to be dependent on a few things. There's going to be a few big news coming out, but I think the biggest one would be the Federal Reserve chairman speaking again in about 4 hours' time. So I think in the last 2 sessions when he spoke about interest rates and the sentiments and conditions of the current economy, US economy, there was a huge volatility in terms of dollar pairs, and I would expect it to be the same again this time around. Okay, so I think the best case here, because euro dollar is bearish, we do not want to be buying in this scenario, in this situation, but at the same time, we do not want to be selling at the all-time low, or we do not want to be selling at support. Okay, so the best case scenario right now would be to actually allow price to fall for a sell, for it to fall again. This will form our new resistance, and then we get a retest, and then we try and sell again at this level. Okay, that's for euro dollar. And again, if I were to remove everything, okay, if you are a bull, right? A pattern on the 15 minutes that you see. And again, this might be indecision by traders right now because of the announcements later or the speech later. But we can see that this was the support. Your liquidity was grabbed by your sellers, right? Then buyers push the price up past the previous high. And so this move up here tells us that buyers are coming in fresh, right? They came back without breaking this bottom. This is, if you look at the retracement, it's probably a 0.78.6% retracement. And the wicks, in fact, hit 100%. Okay, so if this broke past this was the change of character that we're looking for. And then the buy was at 78.6. And again, this white candle here shows that there's a cascading of some sort of liquidity to the upside. And then if you were to look at the price here, right, this again is 78.6, and then now prices bounce off this level. Again, because of the huge downwards pressure, this also means that right now we know that there's buyers liquidity here, right? So your buyers are putting their stop loss all at this level. So that might be a scenario where if this doesn't break, if this move up here right now doesn't break this high, we can expect prices to come down to sweep this liquidity. And if sellers were to enter the market, then we can see a further downside. Okay, so for us to re-enter into, if this is a valid buy, we want prices to break above this level, and then this forms our new support for price to retrace, and then we start buying again at this level. Okay. Yeah. Okay, let me clear this. Okay, so the next one would be dollar index and then gold. Okay. Let's remove this. Okay, so gold again, I think the last time around we were talking about again, I'm not going to redraw everything just so that we can go go briefly on the high overview. We have mentioned in the past 4 sessions that gold just broke a long-term support, which was this level here, right? So unless it breaks above this, we'll be looking for buys. But for long-term trades, right now, gold is bearish. Okay, so I'm going to touch a few things on gold. What might be the biggest reason for it to break above this level? But right now, we're looking at this downward channel. Okay, so so this downward channel, we sort of achieved the targets. This was the lower high, right? This determined this lower high. This two determined the lower low. This is the lower high due to this, and then now we are looking for this level. So again, we were unsure whether or not this was the low, right? Was this the low, right? Okay, so but if you go down to the 5 minutes, right? This was the last leg down, and then this black candle here was our push to the downside, but it broke above and we test this this level here. So at this level here, buyers were trying to push the price up, and then sellers came in to push it down. So this was where the buyers were trapped. This is my new resistance, right? Hit this point, came back down to this level, and now this level was supposed to be somewhat lower, to be the lower low, but instead buyers came in and pushed the price up towards this level. So when we see this double bottom formation, the entry will be at this level here. Again, sellers here, they were wiped out by this move up, right? Or they were suffering a drawdown here. So now this is our new support, and that's why this would be a good entry for us to buy. Okay, so again, there are two scenarios for such a move. Let's delete all of this. Okay, usually when we see a double bottom, there's 2 sort of scenarios that we can use to trade. So when do we trade the where do we actually determine our entries for such a pattern, right? So okay, when we see a double bottom like this, right, we want to see for this particular distance from the neckline to the bottom is a 53 pip fall, right? We want to see if the breakout it's at least 100% more than this move down. Okay, so if this level here from the neckline, right? It doesn't matter because these are a few pips difference. You can use this level, you can use this level, whichever level. But as long as it is a 100% move as compared to this downward move, we can say that this would be our new support. Okay. The other way, other scenario that may happen is that it came down, the candle closes above this level, but it doesn't move at least a 100% move based on this length, and it comes back to retrace. What we usually do is we can use the Fibonacci tool, right, and look at the 78.6, and that will be our best entry to enter. Okay. So this is the other move. If it's more than 100%, then this will be our new support. Okay. So now we can see gold moving up. Let's see. So I think based on this move here, again, I removed that channel down. Okay, but we can see that this is two things here. Okay, so this is the upper channel of the upper boundary of this downward channel here. So what we are looking for right now is a change of character, right? And then another leg down lower, or change of character, bounce up, and then moves up again. Where would this end up? We will look at the liquidity that's available here. So sellers came in here, sellers came in here, here, and here. So if buyers were to push past this level, this will be our new resistance to look at. Okay, again, and if we zoom out again, this level here has only been tested once. Okay, so this is your support, broke down, becomes our resistance. So far, it only has been tested once at the entry. So this is basically sellers doing it twice, right? They unleash their first lot, let it recover back to this point again, and then at the same price again, they push it down again. Okay, so this is I would say a strong resistance. So and again, this was the start of our downward channel, which also means that once we break out this level, which we already broken out. Okay, so what we want to see right now is a white candle that stays above this channel. This level here can be debatable, so I can sort of like move down on a 5 minutes, right, to say that if this closes well above this level, then I might be looking at retest and push. But again, we are not too urgent, or we're not too quick to actually be buying gold at this point in time, right? We can allow price to break out clearly, and then we test before we enter a new buy. So okay, for gold, so there's one question on what are fundamental factors leading to recent spike to 1630 for gold. Okay, so I think so there's this conversation around the Fed pivoting. So what's the Federal Reserve pivoting means? It means that as they're trying to curb inflation by raising interest rates, right? The thing is that it's a lagging activity. So basically, when they raise interest rates, the effect of that will only be experienced, or will only affect the economy, say 1 month, 2 months, or 3 months down the road, right? So they want to make sure that they're careful in not increasing the rates too quickly, such that they fall into a recession without sort of like a soft landing, right? So a lot of this move right now we see here is that people are thinking that the Federal Reserve is aggressive in their rate hikes, and that they might change their tone into a slower rate of growth for the federal for the Fed rates. So and a lot of the other banks, the Bank of England, Bank of Japan, they are actually carrying out certain monetary policies to actually increase their interest rates, such that their currencies do not depreciate that much against the US dollar. Okay, so a lot of this is overreaction towards Federal Reserve being too aggressive in the rate hikes, and that like now this is this is not based on fundamentals of gold, but you can see that this is actually more of the dollar, the strength of the dollar, due to the fact that the market might be trying to price in or trying to predict a slower rate of growth in terms of the interest rates. Because this I think this is what we are seeing right now. It's quite unprecedented. So you can see that the pound, the euro, the dollar, the Swiss franc, they're almost at $1 each, right? They're $1 to $1 to $1 to $1. So that's something that's quite peculiar. Even like for pound dollar, right? It went to 1.03, which is almost 1:1 to the dollar rate. So this is probably the all-time low for pound dollar. So the large move for this breakout might be due to the fact that a lot of us are actually expecting some sort of pivoting by the Federal Reserve, which again I would like to highlight that the if you go back to the events page, right? Okay, right now in Singapore it's 8:30, right? There's a Fed Chair Powell speech again in 2 hours time. So that's something that I think market will react towards for this event here. So depending on what he's going to announce, there might be a retrace. If they are still being aggressive on the federal rate hikes, then we might continue to see the downward pressure. But otherwise, if there's a loosening of their aggressive stance, then we might see anything against the dollar appreciate. We can see everything else appreciate against the dollar. Okay, so another thing that I wanted to highlight is that what could cause gold to actually break towards the higher levels, right? Would be uncertainty in terms of geopolitical tensions. So if a war escalates further in Europe and in Russia, if the US were to join the war or in some sort of fashion, right, then gold will be considered the neutral safe haven, right, against all the other currencies, and we might see gold spike up if the announcement is it's unexpected, as well as an escalation of tensions in Europe. Yes, so this downward move, corrective movement of DXY is called. So you can see euro dollar. I mean, you can look at, it's not just gold appreciating against the dollar. So this broke out. You look at euro dollar again. Like I said, this is starting to move up again. Again, this is 15 minutes. A few pips doesn't really. Let's see, what's this move here, right? It's a 20 pip move. So I don't think that's really a big announcement or a big move right now. But again, this is sort of what we have been seeing since 5 days ago. Again, we can highlight that this is our resistance here, and it's trying to move up before breaking down again. Right. So again, if on 15 minutes this broke up, I want to see a candle with its open and close above this channel before looking for the retest to buy up gold. Okay, and then I think the last one would be pound dollar, which I kind of wanted to highlight. It's really interesting to see that big fall, that 4% drop on Monday, and then there was a V-shaped recovery. I think that was kind of unexpected, and then we formed this channel here, and then now the range, it broke below this range. So this of course will form our resistance, and then now it's retesting this resistance. Okay. Yeah. So again, this is the resistance. What we're looking for right now is formation of a inducement of that level, and then break below that level, come back, and then target will be here. Okay, and then this is sort of the all-time low, so we will expect a bounce here. And again, if there is no big move to the upside, then the expected move will be forming a triangle again, and then down. Okay, so we did cover quite a bit. Are there any other pairs that you guys are interested in? Maybe we'll look at one other pair before we end today's session. Pound yen. Yes, pound yen is also very interesting. Okay, so this is pound yen. Right. Okay, so I think what we were discussing back then was I think last week we were looking at this range here. So if you go down to the hour, yeah, I think we were midway around here. So the previous time we mentioned this touched. This was very close. Touch here again, and then this was the point, and so it was moving on the leg down, and then basically this was the announcement of the intervention by Bank of Japan, and then it broke below. So this was largely based on fundamentals. So now we have this this leg down. So the new range that we're looking at will be this level here. Okay. This will be our new range. So sells will be here, and then any buys will be at this level. Again, this support is untested, so it's going to be a very big support. So we're not looking to buy anything right now. It's still a downward trend, right? So no reason for us to buy here, but if price were to move back up here, then it gives us additional reasons to sell. Okay, let's look at the Nasdaq for equities. You want to look at Nasdaq, or do you want to look at S&P? So they are highly correlated right now, so I'm not going to be too fussy on what we're looking at. They're probably going to be the same pattern. Okay, so so again, this is a very so I think if you were to look at maybe sometime in August, right? There was a fake out, right? Fake out, and then now it retests. Okay, this double bottom doesn't resonate with me. So for those who are not familiar with patterns, right? Usually a double bottom means that buyers comes in to defend these two areas, and we're expecting a move up and then retest this level again. Okay, that's kind of like the overall scenario. But because of the fundamentals of rising interest rates, the rise of interest rates, right? It's very detrimental to a lot of it's very detrimental to stocks. So basically, especially tech, where they use a lot of credit to fund their operations, to fund growth, or basically all your growth companies, your real estate companies, because they rely heavily on credit to fund the building of their properties. So as long as interest rates, the outlook for interest rates are to increase, right? The components of, like, say, the Nasdaq, or even like VTI, if large components of it are made up of growth stocks, made up of property, real estate stocks, then this double bottom is not going to be a bullish move, right? So what I would think is that this might right in the near term move up, and basically we want to look at a few things. So this was the last, if you look at the daily, right, this was the last candle up, and then again this is a much better indicator here, because I think this move up, right, we're trying to look at a higher high. So buyers came in here, but sellers, if you look at this black candle here, this is a strong sell down by the sellers. So all of these buyers here are trapped. Okay, so this would be a more reliable level. So for us to be bullish, I would say that we need to get all of these buyers out, all these sellers out, which means that price needs to move at least to this level, retest, and then we buy here. Okay. The much more likely scenario would be moving along this support level and then breaking down. Also largely dependent on today's announcement, today's speech, might or might not move the market. But if they continue to be aggressive in their rate hikes, then we'll see something like this breaking down. So again, just to prove the point that they're actually very similar, you can look at SPY, which is your S&P 500, right? Same thing. There's this double bottom here, right? And then we're going to look at big selldowns. So this leg here, and again, this move here actually took out a lot of sellers, right? But again, due to fundamental news, we are coming back down here again. So this will be our level to break above for buyers, right? And then this will form our new support, and then as it comes down, we buy again. And then SPY, you can look at VPI as well, right? More a bigger, same thing. We have a similar pattern. This downward move. This move here got all of our sellers up, right? And then broke down. Again, pre-market is already below the previous low, right? So again, this is the level to bid. We need to move up, and then this is our support level. Then, so if you are a buyer right now, you might be trapped, I would say, right? If you're bullish on stocks, that's kind of like a weird place to be right now if you're a buyer. But other than that, you can look at selling put options or buying put options, just to mitigate the losses in your holdings. Okay, so that's kind of like for equities. I don't really look into equities that much due to the fact that they are largely influenced not only by technicals, but also the fundamentals of the companies. But of course, for large indices, the movements and the technical analysis would be very similar to Forex. So I'll say this is my take on the sort of short-term to mid-term outlook for indices. The higher probability would be for it to bounce here and then go down, or today's announcement will just bring it down even further. And of course, this move up here might also be event driven. So if, let's say, the Federal Reserve decides that they're not going to be that aggressive due to certain numbers that we're seeing in the economy, which is not the case, right? Then they might reduce the next interest rate hikes, and then market might rally because this has already been priced in for the 4.5% interest rates. Okay. Any other questions? again, I would say if you look at some of these dollar pairs, somehow I think they're a little bit optimistic about the speech later, right? So we might be seeing a relief rally for a while before we get before we continue the leg down. Okay, so even I think if you look at crypto as well, Ethereum is holding up well. Right, it has already completed the top, touching this few top, so expectation would be the continuation of this level. Again, this is negative 400. It's not to scale, but otherwise breaking out of this will allow us to look for buy positions for Ethereum. Okay, so any other pairs you guys want me to go through? Otherwise, that will be all for today. We'll have another session on Friday again, just to see some of the analysis that we did today and how it turned out. Overall, dollar is still very strong. We want to be on the lookout for buys for the dollars and sell for everything else. Okay, again, like you see, gold is pushing up here. So I would expect this sort of liquidity. So again, this push up, the second last candle, sort of look at might be an indication that there's a cascading liquidity grab by the buyers, right? Pushing the price up. So if I want to get sellers out of this market, the next few candles has to break past these few highs without any retracements. Okay, I want to see buyers liquidating the seller positions, and once sellers are out of the market, then we will be bullish on gold. So we're going to be patient. We're not going to go into a buy at this level, right? We want to see big white candles taking out all the sellers first, and then the early buyers taking profit, and then we re-enter and move gold to a higher position. Yeah, but of course, if you're scalping, then it seems like buyers are in control here. Okay, that will be all. Thank you guys for coming to this session. I'll see you guys again on Friday. Okay, and of course, all of these webinars are recorded, so you can go down to this webpage, vantagemarkets.com/webinars, to look at all of the past webinars that we have conducted. All right, once again, thank you, and see you on Friday. Okay.